Hey guys, hope everybody's doing okay. Today I'm bringing you the QYLD versus GW portfolio. I actually almost forgot about this. So what I'm going to do is go over some changes, and I'm going to try to make this a little bit more GW friendly, okay? And we'll talk about that as we go along. So if you're new here, please like, share, subscribe, do all that good stuff. Down in a pinned comment below are all my affiliate links, and the important one for the next month or so is the M1 Finance referral link. If you deposit $100 as a new customer, you get $30 from M1 Finance, and I get $30 from M1 Finance. So it's a win-win, and every dollar that comes in for me, as far as affiliate, YouTube, all that, goes into the GWRV fund. And if you don't know, me and my wife are going to retire shortly, not shortly, but anywhere from 3 to 9 years, buy an RV, and we're going to travel. And we're using all the money from the affiliates and YouTube and all that to try to fund that and grow it. So I'll be sharing that with you in the next couple of weeks. Have some exciting news. So let's get with it. For those of you who don't know, the QYLD versus GW is a paper portfolio, $250,000 starting value, and I put $250,000 in QYLD and $250,000 in a bunch of stocks that I sold covered calls on. Theoretically, this is a paper portfolio. Paper portfolio meaning it's just a test. It's not my real money. And what I'm finding out is that the covered call side, where I chose stocks and sold covered calls, I don't want to say it's a lot of work, but it's more than I anticipated. So what I'm going to do is make some changes here. So I'll show you here, and we'll just get into it. Here's the covered call side, and you'll see I'm sorry I didn't take a screenshot, but we had, if these cells are lit up in red, that means that the shares got called away. So I had three sets of shares called away, which was ExxonMobil, US Bank Corp, and Walgreens Boots Alliance. And that netted me $60,400. And what I did with that money is I bought, SCHD was also called away. So what I did is I went and bought 200 shares of QQQ. And QQQ is at a big, high right now, but that's neither here nor there. What I'm trying to do is I'm going to try to make because this was never an apples to apples comparison with QYLD and what I was doing here, because QYLD doesn't sell covered calls essentially against the stocks that's in the Nasdaq. They sell index options. But that being said, what I want to roll this into is, as these other shares get called away, I'm going to roll everything into QQQ. So eventually we're going to have QQQ versus QYLD. And QQQ, what I'll do, this was actually given to me by, it was a viewer down below. If it was a Tom, I'm sorry if I messed that up. But what I'll do is, as I build up this position in QQQ, I'll sell covered calls, successive, because you can get more money the closer you get to the strike price. And if it gets called away, it gets called away. But that's how I want to see, if owning QQQ and selling a laddered, basically, covered call strategy against QQQ, could you also participate in growth that QYLD doesn't necessarily give you? And that's what I want to try to do, and it'll also reduce the amount of work this takes. because, every month I've had multiple shares called away. And all that does actually is generate taxable events, as well as just work to try to find places to replace that money. So you can see we had $60,400 in capital that was pulled out from the shares called away, and I bought 200 shares on Monday at $63,292. So I had to pull some of this money from cash. Okay. So right now, we sold 7 contracts of AT&T. This is for the current month from January 19th to February 19th. Is it the 19th? No, January 15th to February 19th. So I forgot to change the expirations here, but these are all for February. So 7 contracts at a 31 strike for 25 per contract. Got 175 from AT&T. Verizon, we sold 2 contracts with a 60 strike at 28 each, or $56. Kellogg's, I meant to buy more of Kellogg's, but I didn't. So we got a 62.50 strike, 3 contracts at 120. QQQ, we got a $340 strike price, $95 from each of those, 2 contracts at $190. Altria Group, we got a $44 strike, 38 per contract for 3 contracts for a total of $114. I'm gonna have to clean all this up. It's gonna just take some time. I'm just running out of time here. CM, which is a Canadian Imperial Bank, got a 90 strike, $140 for that contract. Only 1 contract there. USB was called away. Gilead Sciences got a 72.50 strike, $75 per contract. 3 contracts on that one for $225. Pfizer, we got a $39 strike, $32 per contract, 2 contracts for $64 there. Walgreens got called away. 3M, $185 strike, $59 per contract, just 1 there. WP Carey, we got a 70 strike, $50 for that, 2 contracts. IBM got toasted today with earnings, so it's still above my cost basis currently, but I still sold a strike, $135. I got $180 for that. Cisco Systems got a 47 strike, $22 per contract, 4 contracts there for $88. And PPL Utilities, we got a $29 strike, 45 per contract, 7 contracts there for $315, for a total of $1,826 for call income for the month, with the monthly dividend average of $7.83. That gave us a grand total of $2,609.33 in total income for the month of, what would you call that, February, I suppose. So we had a surplus of $109.33. You'll see the cash position is now down to $41,615. That was because I bought the 200 shares of QQQ, which cost $63,292. So I had to pull that from cash. So after all that, the covered call gave us enough income because we're income need of $2,500 per month. So it was successful in doing so. Now QYLD has just been a rock star, and we'll look over at that. We had the end of last month, we had 297.61. I think we added 11 shares to our position, bringing us to a total of 12,293 shares. QYLD paid out 22.88, or is going to pay out. I'm always doing this ahead of the payout date of QYLD, but at least we know the amount. They're paying 22.88 cents for the distribution for January. And that gives us a total of $2,812.63, comfortably beating the $2,500 income need and giving us $312.63 in excess cash that we will punch in over there and get us some more income from it. So it looks like QYLD is just gonna keep growing. The only thing that's going to stop this is if we have a major market correction, because QYLD will participate in the market downturn. So if QYLD drops 50%, we're in trouble over here. We'll be in trouble on both sides, but if they're going to pay out 1% a month is basically what they've been doing. If they drop 50%, obviously you're not going to get $2,500 per month. So that's kind of was my thought, was the advantage of the covered call side, because I had this cash cushion, which could protect you for a while. You know what I mean? In the event that a market crash happens. So at the end of the day, they both strategies worked well. QYLD gave more income than we needed. I could have squeezed more income out of the covered call side, but I'm not selling at the money, and I probably might try that next month, because I want to get, like I said, out of some of these positions and build the QQQ so that I can have more of an apples to apples comparison with QYLD and QQQ. So I know that was a lot. I hope if you stuck in this far, thank you very much. Leave me a comment down below. I would appreciate it. Like, share, subscribe, do all that good stuff, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.